lot of reforms have been introduced for the betterment of Indian money market. I list down few of the reforms. Starting with, there are introduction of lot of new financial instruments into the money market, starting with treasury bills with the varying maturity periods, commercial papers, certificate of deposits, and MMMF, that is money market mutual fund systems, which facilitates and enhances the rotation or handling of money market, and it enlarges the utility of money market. Apart from that, RBI started using repo and reverse repo rates in order to introduce or in order to control LAF, that is liquidity availability facility, right? Apart from that, now as a part of reform, the rate of interest is decided by market forces. In order to improve payment system, the electronic payment system like NEFT, that is National Electronic Fund Transfer, or RTGS, that is real time gross settlement, have been introduced to enhance the payment system of the money market. As a part of technological upgradation, well, the digital dealing system has been introduced to boost money market functionalities. Now, let us understand all these points in greater detail. Well, treasury bills is same as debentures. RBI issues treasury bills on behalf of government India to raise funds. Period of maturity for these treasury bills are less than 1 year, so they are typically low debt obligations for the system. Well, there is no interest given on treasury bills, but understand at the time of redemption, they are redeemed at discount. Commercial papers are also one of the financial instruments issued by private companies in order to raise capital and handle their working capital fund issues like payment of taxes, salaries, and other areas. Maturity of these commercial papers are also less than 1 year. They are short-term debt obligations again. Certificate of deposit is same as fixed deposit, where people invest or invest money for certain period of time, and at the time of maturity they get invested amount and interest on it. Well, money market mutual funds are same as mutual funds, where people invest their money into certain fund and the dealer invests this money into debt instruments, and the returns are distributed amongst its investors. Well, RBI uses repo system. Now, RBI repos are basically used at the time of deflations. So during the deflation, there is less money is float circulating in the system. At that particular point of time, what RBI does is purchases the securities from commercial bank and gives funds to commercial banks. So as commercial banks receives funds, so the more money is circulated in the system, and automatically the situation of deflation has been handled. So RBI repo is a typical situation where RBI try to handle the liquidity issue at the time of deflation. So in case of deflation, what RBI does, it purchases the securities from commercial bank and gives money against it to these commercial banks. Since the commercial bank has more money to give loan, so the money circulated in the system and the economy is tried to overcome from the situation of deflation. In case of reverse repo, exactly opposite happens to repo. When the market is in inflation, the prices are going and there's a huge money circulation in the system. What RBI does is sells the security of commercial banks and try to siphon out the money from the system. As the money has been siphoned out from the system, so there will be less money in the circulation. So it helps in controlling the inflation. So In nutshell summary, there are a lot of reforms which are introduced in order to do betterment of money market, starting with introduction of lot of financial instruments like treasury bills with varying maturity periods, commercial papers, certificate of deposit, and mutual fund or other money market mutual funds. RBI introduces RBI repo and RBI reverse repo in order to control liquidity availability facility. The interest rates now are decided due to market forces. For betterment and speedy payment system, the digitized system of RTGS and NEFT has been introduced. RTGS is real-time gross settlement and NEFT is National Electronic Fund Transfers. Well, the electronic dealing system has been introduced for the digital upgradation of the system.